protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into the Money Unleashed podcast with Chris Hoffman of the Hoffman Financial Group. We have new episodes coming your way on Mondays and Fridays each and every week, so make sure you're subscribed wherever you get your podcast. And you can also catch Money Unleashed with Chris Hoffman on WSB in Atlanta for 2 full hours on Sunday from 11 a.m. to 1 p.m. Now, Chris, I found something pretty fascinating on the tariff topic that goes beyond the headlines and could easily resonate with our listeners no matter where they are on their financial planning journey. Forbes examined how the generations react to the financial anxiety we're feeling. We don't spend a lot of time talking about Gen Z and even less talking about millennials for obvious reasons, but one thing those two groups share beyond being in the earlier stages of their financial planning journey, if they've even taken those steps, is that they're probably the most susceptible to getting lost in the news through the wonders of social media, and I use that term loosely. Fear-laced tweets, memes, TikToks, and social media in general can really turn up the volume in times like this, and that's not good for any of us, is it?
No, it's not. And especially for the younger professionals, they should be heads down, working and contributing to society and contributing to their 401ks and building their nest egg and their net worth. So the problem is information is readily available, and it doesn't just stick with the Gen Zs or millennials. It actually creeps up to all of us. I mean, everybody has a phone, including my 86-year-old father, right? He's not very good at navigating it, but
that's what you're there for.
He's like, you never call. I'm like, Dad, I called you 3 times. Look at I can't figure this out. But it leaks into our life, and the news and the access to news is literally you can pick up your handheld device, and it's right there in your face. So that makes it tough. They'll look at instant gratification. They'll look at, is the stock up or down daily, weekly? I know I've got older children. They look at it and why is this going down? Well, it's just one day, right? Things don't go up in a straight line. So I think that's the flaw and issues that the Gen Z and millennial era are facing. And it does impact the rest of us because access to information can get you more emotional about reacting versus using rational, well-thought-through planning before you take those steps.
All right, so maybe some responsibility with how much you're doom scrolling through these things would be good for all of us, but particularly for Gen Z and millennials who might be, again, a little bit more susceptible to that kind of stuff. But it does hit us all in different ways at different times. But I want to key in on a group that has a growing number in the retirement red zone, as we call it, and that is Generation X. Midlife professionals with careers and mortgages and kids and aging parents that could be feeling the pressure more than ever because in many ways, they're the financial shock absorber for their entire families.
Yeah, and I'm a Gen Xer. And I'll tell you this, the Gen Xers, they rode in cars without seatbelts and bicycles without helmets or knee pads or whatever kids wear nowadays. I mean, it was a tough generation.
Yeah, you could drink from a water hose.
Oh, yeah, and that didn't kill you or get you sick or anything. And you weren't allowed in the house until it was dinner time. You came home from school, you dropped your books off, and then you came home when Mom yelled from the porch, dinner's ready.
Or the streetlights came on.
That's exactly right. So Gen X, they should be a lot less emotional than Gen Z or millennials. The problem is they have more money that they've saved than those other eras we've talked about. So when you've got $500,000 or $1 million or $2 million or more in your portfolio and information is being thrown at you literally every second of the day on tariffs, on political landscape, on what's the Fed going to do, right? I think Trump going after Fed Powell and saying he wanted to fire him, and then he pulled that off the table. And we had some kind of moment, supposedly, through our government saying China is willing to come to the table and we'll work out a deal that's good for them and good for us. And the stock market skyrocketed. But folks, that's one day. And you've got to stay calm in the water, look at your financial plan. Don't react to whether you're up $100,000 today or down $50,000 tomorrow. Do you have the right mix of assets? And will your assets serve you in either an up or a down market? That's the only thing to measure in your financial planning. And then you got to have your income plan, protection rotation strategy, growth targets against benchmarks, but just stay glued to that. I think Gen X will largely shake off the social media stuff. At least I hope we avoid it, because I think it's poisonous to the individual investor.
Yeah, but a lot of other pressures that they are feeling. You mentioned something a little bit earlier about how they're kind of sandwiched in between generations, because not only are they raising their kids, they're helping their aging parents as well. And if you're curious about Gen X and what particular years that covers, 1965 to 1980. We talked about this way back. We found out
I'm a 67, so I just made it in there.
I'm 1980, so I brought up the rear of that generation, or we're bookending it, basically.
Exactly.
But that's a very different group of people if you really do think about it, because you will find people who are much closer to retirement, and you'll find people who are very much in what should be their highest earning years and trying to get their retirement savings in plan and really their financial affairs in order. And again, we talked about the stresses that they could be under and the things that could make it a little bit more difficult, the things that life throws at it.
Yeah, so how old are you? I'm 57.
44.
You're 44. So you've got 13 years between today and when you'd be my age. And I'm looking at it going, wow, I wish I had those 13 years back. I did pretty well in those 13 years. But if you start now and you stay conscious to it, month over month, year over year, in building your portfolio and being active in working with somebody, and I'm not talking about actively picking stocks. I'm talking about actively organizing your financial life, folks. How much in tax-free investing do you have? How much are you saving in after-tax money that doesn't get dumped into your 401k at work? You've got those three investment buckets, folks. Tax-free, tax-deferred, and taxable. Are they all equal in your portfolio right now? If they're not, I understand why. Your 401k, that's pre-tax, has probably got the most amount of money in it, but you've got to diversify. You do not want to cause yourself a tax problem, so there's no reason for you to not start working with a professional when you've got about $500,000, even if you're in your late 40s or early 50s. It's time for you to get that plan and know what to expect 5, 10, 20 years from now. So that's the way I would look at it, and that's the way I would set myself up. It's never too early to start working on your plan. Whether you implement the plan today or not, at least you'll have an understanding of what that plan looks like in today's environment, and you can revisit it 5 or 10 years from now.
And that part obviously is key to be able to make the adjustments as you go along. Now, we've talked about the younger generations. We've talked about a middle generation. Then we have the baby boomers. And market dips may have a familiar feeling for this group because many of them remember the dot-com bubble bursting, the Great Recession, things like that. For younger baby boomers, this could make retirement feel maybe a little bit riskier than they'd like. And for those already in retirement, it could just add some uneasy feelings. So this is a generation that's further along in the game than any of the others. And Chris, they can't afford to let things get out of hand in the late innings, right?
Yeah, and the baby boomer generation has lived in an environment where they got a lot of pensions, a lot of fixed income, good interest rates. There was some inflation back then, certainly during the Carter days there was just hyperinflation, so they've dealt with a lot. But they did not step out over their skis with Bitcoin and NVIDIA and Amazon and Apple. That was an investment they made, and if they had those stocks, they had them to hold them forever. And there's a big difference between that type of investment style and saying, no, my stocks are what's going to fund my retirement. If you would start to work with somebody and understand that the stocks in your portfolio are not there to pay for retirement. That doesn't happen with the NASDAQ stocks. They don't pay you a dividend. Yes, I love the growth when it happens, and we certainly will capture that growth, but that is dependent on the market. It is not dependent on us having the right strategy. We need to invest the right amount of your resources in it, and those resources are not ones that we would predict our clients needing to use in a next 5-year period. That's the way we differentiate between how to invest and how much to invest in various sectors of the market. So baby boomers, they came from a pension world. They had reasonable Social Security. They did a lot of dividend investing and still do. And they took advantage of higher interest rates. And now that higher interest rates are back to some extent, they're certainly not as low as they've been for the past several years. They're not historically out of whack either. I think they're about 2.7, 2.8%. That's relatively low, but you can still get some decent fixed income products at a very nice interest rate with a higher level of protection over that asset, certainly than a stock. So that's the baby boomer generation. I would argue they're the smartest group out there. They've been around the longest. They've seen multiple cycles of the market. They're not ones that are going to get fooled into another great recession. At least that's my hope for them.
Yeah, I guess we could say they're the most seasoned of the generations. And it's just interesting to put a bow on all of it to see that obviously as we experience life, we are able to take that knowledge and bring it forward with us. And, you know, there's a lot of adages we could throw out there, like never making the same mistake twice, measure twice, cut once, these kinds of things. And you learn that through experience. And I think that you have a lot of that in the baby boomer generation. Gen X certainly working its way, and a lot of time to make mistakes and perhaps recover from them and just learn a few things in general for Gen Z, millennials, and those to follow after that, should they also be tuned in to Money Unleashed. But the bottom line is this. Everyone loves growth, but times like these remind us the importance of protection is also paramount. So if you've been working hard to do the saving, Hoffman Financial Group can size up where you are with the Portfolio X-Ray and provide you with suggestions and strategies to optimize your accounts. There's no cost whatsoever to get that Portfolio X-Ray. They'll do the work, and it is yours to keep. 404-341-6767 is our phone number. 404-341-6767 and unleashyourmoney.com. Just click on that Portfolio X-ray box right there. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.